Good morning, everybody. Morning, Mississippi. Morning, Sam. Thanks, Harsh. I appreciate that. Thank you. How do we handle hymns? I bought hymns yesterday and I got stopped out. So that was pretty dang annoying. This should be pretty exciting. I'm about to see if I can't get Clement up here. For anybody not familiar with Clement, he is competing in the United States Investing Championship, and he's absolutely crushing it this year. Let me see if I can get him up here. Yeah, nuclear stocks are gapping up. Yep. Yeah, on a deal with Constellation Energy, who I am familiar with, deal with Meta, assuming for some nuclear power. And this is why I am pretty lucky. I covered half of my SMR, and I have a 3547, so I'm not up a ton on it anymore. About $1.30 when I was up about $5. So let me just see if you're ready. All right, cool. Clement, good morning, man.
Morning, Ariel.
Hey, how are you? By the way, if you choose, you can also share a screen.
Okay.
And then if you want, I can unshare my screen if you feel like you want to share yours. I think you may be able to see the options down there. I'm not entirely sure, but.
Let me see. 1 second. Yeah, I could share my screen.
Cool. And you can just put it up, and then at some point, I believe I'll just be able to click it or remove mine, and you'll be able to share yours. Like, go ahead and give yours a try, and maybe yours will pop up if you'd like. And then I kind of want to just pick your brain about things you're seeing, things you might be doing here in this environment. Oh, here we go. Beautiful.
Yeah, you guys see my screen?
Yeah. Oh, yeah.
Oh, yeah. Okay, cool. Right now, what I'm seeing, so I got involved with the precious metals yesterday. I think with your watch list the last couple of days, I think we broadly saw the same thing. And just kind of seeing, especially gold, kind of putting in like this tight consolidation around this downtrend line. It got really, really tight. At the same time, we saw, a proliferation of setups in the gold miners, so things like Newmont Mining, Osisko Gold Royalties, going into new highs. What's that? Kinross Gold, which you own.
Yep.
A lot of these names were setting up really tight, and so that was my focus going into this week. And so I caught it. Right now, I think they're pulling back a little bit, so I think that's fine. Just trying to let the trade work, and yeah, I think coming into June, it's a much more different market environment compared to last month, where we were trending really nicely. The leaders were just coming up off the bottom, going straight up. It was a rather easy market to trade. And then it started getting a little bit choppier towards the last week. I did not trade that last week too well. I was a little bit of a smartass, so I tried shorting Palantir off of this double top. Obviously, it didn't work, and I was chopping myself up a couple of times there. Took a couple of losses, and then it proceeds to go without me. So, it is what it is.
I know the feeling.
Yeah.
So,
but even just lately, the price action has been wild. Like if you saw before Palantir actually broke out, it ripped higher, came all the way back down, ripped higher again. It's just wild price action where it becomes very frustrating, especially if you're trying to size in big and trade really, really aggressively. You're gonna get stopped out a lot. So focus for me coming into this month is to slow down, be a little bit more picky with what I want to trade. I want to see whatever positions I have now go before I try and put on another trade. Just deliberately trying to slow myself down. One of the biggest kind of weaknesses I have for my own trading is, when the going is good, I can do very well. I'm a boom and bust trader, right? So when I boom, I really boom. But it's a matter of for me to control my drawdowns, and it's when I encounter tougher trading periods is when I need to slow down and tell myself to kind of hold off a little bit.
Yeah, and keep what you've made, right? I guess that's half the battle for most people. And I'm also, I can be guilty sometimes of over trading. It's not like I don't think I'm in the right places, right? Yesterday you saw I tried Dash, yesterday I tried Hims, and then I get stopped out at low of day on both of them, only to see Dash close higher than where I initially bought it, and then for Hims to be gapping up this morning. So it's not like you may not be in the right places, you may not be focused on the right things. It's just that the environment isn't currently something where it's just like, especially new buys, where you just buy it and then things are completely flying out of there. If you're positioned in Hims from 50, okay, well then you just got to let it work, right? If you're in Palantir and then you held through that earnings gap down, right, and you're in from 100, you just got to let it work. But it's not nearly as simple of as an environment as it was towards the ends of April, the first and the second week of May. And that's even what I've noticed. And, I have been stopped out of names, whether it's Uber, and again, Hims and Dash, and CLS. Now, CLS, I might have choked off a little bit too soon, but really that's just kind of the environment we're in. But as it relates to what you said with gold, gold had dozens of setups. And for me, when I see a sector with that many individual good setups, it brings me back to I don't know if you've ever studied these, Clement, but have you ever studied like the oil names going into January 3rd of 22? It was COP, XOM, CVX, Oxy, DVN. And if you go back to that time period, it was literally going right into January 3rd of 2022, right? And there's COP, and just look at that time frame and look at what the setup that it had going right into that. So you had a nice move. I think it was like September, October. You had a really nice consolidation. And then look at the 3 tight days just prior to that breakout on January 3rd. And if you go down the list, if the next name you look at is CVX or XOM or DVN or FANG, names you're probably all familiar with. When I start to see setups like this, I'm reminded, it's effectively the same thing.
Yeah.
Right. And then I don't know, that CVX. So now look at something like FANG.
Diamondback. Yeah, they all look the same. I remember you mentioned this in one of your interviews too. I was watching it. Huge fan, by the way.
Thank you. Yeah, I appreciate that. Well, likewise, man. I mean, I always have a big appreciation for anybody who competes in the United States Investing Championship, puts their neck on the line, just to trade. And congrats on a super, super year. So that's awesome.
Thank you. Thank you. Yeah. I mean, the
Now
competition was a way for me to just kind of be accountable. I think this year was when things kind of really clicked. I've always been a little bit of a boom and buster all the way till 2023. I started trading during the COVID time. So I was a COVID born trader, in the university, and you're stuck at home, you can't go anywhere. I was supposed to go on exchange, I can't do that anymore. And so what do? You trade in the bedroom, and then you start learning. So that's how it all starts.
And you make mistakes along the way, and that's how you learn, right? They don't, and the market definitely teaches us, the hard way. But there's a lot of lessons. I always say, like, when you look at the market, it's just like a big puzzle. Like you have a piece of how do you find the stocks that you're going to trade. You have a piece of how do you buy them, when do you buy them, how much of something you buy, how do you trail them, where do you stop out. And the reality is you just have to click all the pieces together. But once you do, trading gets a whole lot easier, right? And even myself, I still make a ton of mistakes. And it's crazy because you can be wrong 70% of the time and still make money. And you can make tons of mistakes and still do really, really well. So that's the beauty of this job, especially if you just trade proper size, let the market pull you in, progressive exposure, focusing on leading sectors, things you and I have talked about privately all the time. So,
yeah, 100%.
Well, otherwise, is there anything else? Sorry?
No, go ahead.
I was going to say, what else do you see yourself doing at the moment? Do you just think that the leadership, in particular, maybe some of the RBRK, like the way I view it is, an RBRK, a Zscaler, maybe even a Netflix. I mean, that's just frozen rope, almost getting a bit insane. And, is this going to lead to a few weeks of digestion? Or do you think these names are going to have some kind of a blow-off move and then that's it? Hey, you missed it. Like, how do you feel? I mean, I'd like to see some digestion, but it's just not coming.
Yeah, 100%. Like, kind of my headspace is that just kind of looking back at the indexes, right? We've kind of got that panic low in April. And since then, we've kind of moved our way higher. And so when I try to put everything in a context, I would feel like we're probably early stages of a bull market, assuming that AI is going to power everything. We're going to see it touch, many companies and drive earnings, so on and so forth. I kind of feel like we're early stage right now. And then looking at that in context with the individual stocks, like you've mentioned, RBRK, it's 10 times ATR extended from the 50-day. Something like a GEV, frozen rope, like you've mentioned, Netflix. All these early leaders are rather extended. But then at the same time, we've seen things like, I think you mentioned Frog yesterday, set up a tight pivot, moved out. What else?
Something there was like a few. Yeah, feel free to share some that may have been on the watch list. Let's see if we've got a few more here. We have something like KD, I think looks pretty good, trying to find some support at the rising 20. No, KD, excuse me, KD.
Oh, KD, sorry.
Yep, no, you're okay.
Yeah. So
just giving these like little neat, 50% move off the lows, 8% pullback right into the rising 20. If you're going to be in a healthy market, the rising 20 is something that you might typically hold. LPLA is another one. FLEX is another one. That's like a cup and handle. There's that kind of gives me that AVGO kind of a look that AVGO gave. So that there's a lot of that going on right now. And those could very well just be your secondary setups.
Exactly. So kind of putting all that together, I guess my headspace is around probably rotation. That could be what holds the market up, allows the index to go sideways while all these leaders begin their digestions. But at the same time, I've been so impressed. Like just looking at a hood, it just broke out yesterday.
Yep.
And I thought it needed more digestion. So, what do I know? But
yeah, I mean, it is a little bit extended from the 50.
It is.
So like
ATR.
Yeah, so this is actually, a spot where now could it go higher? Could it go 10, 11, 12, 13? Yes, but making this your first buy, it's akin to jumping out my second story window at the house and just hoping that I, don't snap my ankle. The likelihood is if this is where you're buying it for the first time, right, you might break an ankle is my point, if you're wrong. So you might not kill yourself. It's not like jumping off the roof of my house. But again, it's getting a little bit extended. And that's kind of what led me to say on Thursday, hey, you know what? I think it's a short-term top for the ES. I hate calling that because it kind of makes it seem like as if, nothing's going to work here. But the reality is you can get a hood, you can get a frog, you can get a CrowdStrike, you can even get a move like Meta yesterday, where I thought Meta looked very clean. Just had that move up, had the nice 10, 12 days of digestion, gave you a tight prior day, and you're off to the races.
Yeah, 100%.
So, and look at Amazon. You might look at Amazon and say, you know what? That kind of looks like the same thing.
It does look like the same thing. Yeah.
So
there are many names that are setting up. That's for sure. So if this continues, I think we're in for a good ride, to be honest.
I mean, I would be having a different sentiment if there weren't so many damn good setups and if names were actually breaking down. The reality is names just aren't breaking down. So, I don't really know what to think when things are, when I look at a Duolingo and I see the consolidation, I might say to myself, hey, this is still a little bit extended. But even in this market, these kind of setups have been working, which is just unbelievable. Now, is it because of the good earnings? Is it because, some massive players are big time underweight and are playing catch up? I have no idea. But it's good to see. It feels like a FOMO market, right? Now, again, I've been having trouble getting a bunch of fresh recent exposure. I mean, again, I feel like an ultimate idiot because, I tried Dash yesterday, which I still think looks like it's ready to break out through all-time highs. If you want to maybe pull up Dash. And then, I mean, that's super annoying.
Yeah. One thing I did notice, though, especially in the last 2 days, if, we were to look at the intraday chart, is a lot of this stuff, market opens, you get that opening drive, but immediately you come back down, right? And then they grind back. They grind back higher. And so like kind of my headspace coming into the next few sessions is to really take the opening session to observe what's gonna happen, because who knows, this kind of opening drive, sell back down action could happen again. And that's what causes a lot of frustration for at least traders trying to get new exposure, trying to, try a new setup that shakes them out and goes higher again. So that's where my headspace is at for now. Even though I see a proliferation of setups, everything looks really good. I kind of would want to buy on weakness a lot more than buying on strength, and just kind of gauge my traction and see how it goes there. I think if this is really early stages of a new bull, no rush, right? And especially after such a good run last month, I'm more inclined to kind of keep what I have and slowly compound my way higher.
Yeah, I mean, you couldn't have said it. You could not have said it any better. And, even when I was looking at Dash yesterday, I kind of told myself I should have rebought it back when it put in its bottom and then it started to reclaim VWAP. You hear me talk about the 620 setup. Very simple. When your 6-period moving average crosses back above your 20, and then you've got to stop at low of the day, with kind of your renewed risk. And if that's the first time you're taking, I love PWR too, by the way, great company. Yeah. And again, this is a lot of what we're seeing. You get the move up and PWR looks like a clean digestion. In fact, that doesn't even look very extended at all.
Yeah.
What's the ATR from the 50?
It's 5.9. Yesterday it shook out the 10 EMA on a 5-day pocket pivot. Gil Morales term.
Yep.
Looks really clean. It's above, let's say 350. It's good. Below, not really. But we'll see.
Yeah,
A
good
lot
above.
of these
Good
energy
above.
names are gapping up.
They are gapping up, and I'm assuming that's a daily. So hourly probably, looks like it's up this morning, right?
Yeah.
Yeah,
That's right.
and that's the story with a lot of these, and they're not making it easy because, what do you do now if you want into CEG, right? I didn't think CEG ever consolidated long enough, and then it just kind of goes without you. It had like maybe 6 or 7 days that it went sideways there for like the shortest moment ever, and then
Yeah.
they're
I
making.
was charting CEG last week. It put in this little tight kind of pivot,
Pennant.
and
Yeah.
then the 10 EMA was catching up, and then I just watched it go. I didn't even take it. And then now it's gapping up. Like if you look here, I think the 23rd of January, that's a left side peak. So what it could turn out to be either a double top if we open and fade, or if we open and go up, it will be a green line breakout, a Dr. Wish green line breakout. So again, it goes back to the point. A lot of stuff is looking good. It's very bullish. Feels like a FOMO market, but be patient.
Be patient is right. Yeah, and there's nothing. I'm not going to risk the progress that I made in the last 6 weeks, chasing stocks, right? I'm okay trying new ones, in particular if they're coming out of tight areas like the ones we talked about, right? Somebody may have, I saw somebody mention Toast, and I own Toast, where it gaps up on earnings, pulls back into the rising 20, and then you get a continuation setup from there, right? I think setups like this, to me, seem like a little bit less risky than looking at a rubric and being like, I gotta own rubric. Any ideas on Bros? Yeah. Like Bros looks great over 73 to me, below 73, not so much. It's just a little flat, kind of like a low cheat Minervini flat base breakout, right? There's got some VCP kind of characteristics to it where it is building some higher lows. The chart's trying to build up the right-hand side. Has this, like I said, a nice little kind of a flat low cheat at 73. For me, I love horizontal lines, right? Sometimes you just look at it and you go good above the line, bad below the line. If other people are seeing that level too, you should see some power through there. And then, just kind of leave it alone if there is no power through there. So, yeah, it looks good. Yeah. I like Bros. And Bros kind of falls into these like, I wouldn't use like consumer defensive because I don't believe they are, but like restaurant stocks, right? I've been noticing lots of power in. Did you notice Eat?
Yeah, I did. It broke out.
Yeah, Eat looks awesome. I noticed that little flag, not last Friday, but the Friday before last. It had just built, like one day prior. Yeah, that was the Friday. It was like the big update. And I was like, what the heck is this? And I was like, this looks like a nice little bull flag. And again, like a head and shoulders bottom, a stock that hadn't even gone down to the 200 during the correction, right? That tends to act like a head and shoulders bottom. That tends to be a leader, right? Think about a Palantir, for instance, a stock that never got down to the 200 during the correction. And then, sure enough, puts in a little undercut and rally, gives you a little kind of a flat base, just about $100. And then you're off to the races. Eat kind of has that similar feeling. And then even Shake Shack. I wanted to buy Shake Shack too, but again, gave too short of a consolidation. And I was like, we're a bit away from the 50. Yeah, right there. And I guess I'm going to have to, and understand the environment a bit better and, kind of just go ahead and pull the trigger on a few of these with maybe smaller size, just to it's the environment, right?
Yeah.
When things are this strong, it kind of sucks that you have to be like, yeah, okay, fine. 5 ATR from the 50, 5.5, 6, you might just have to do it because they're going to go 10, 11, 12 is what their plans are. Kind of in a sideways market, right? You might need to keep it to, no more than 4 because they might only get to 7. But this feels like a powerful environment when you just look around the board, and I don't see any reason to be negative here, and I'm sure you don't either.
Yeah. Well, I'm quite optimistic. It's just my own opinion is I probably want to see a bit more digestion to be a bit more comfortable. Like you said, seeing all these stocks greater than 5, 6 ATR, if I really wanted to take them, I can, but probably with smaller size, just in case, anything happens that, is unexpected. But what do I know? The market often does not give me what I want. And so I think it's just a matter of trying to dance with the market, rather than bend your will and try to force your opinion on it. So that's kind of one of the things that we got to take note of. And the other thing I kind of realized with my trading this year, especially, is pertaining to kind of flowing with the market. A lot of times when I get into a poor trading state is when I'm over trading and trying to force the issue. And so I think I did it in one of my reviews, I think last month, was when I charted, all my buys in relation to the index, right? And it's usually when the index is at an area where there is edge for the long side. So for example, once it reclaimed the 10 and 20, it comes in and it finds support. And then you see like a proliferation of long setups. That is a high probability area where you want to trade. And then for the rest of the time, you kind of want to be reevaluating your holdings and maybe not being as aggressive, even though things are moving higher. Because the moment you make a trading mistake and you get out of a flow, it becomes very, very difficult to get back into a flow, if you know what I mean. So just kind of dancing with the market is very important. Trying to be as patient as possible and find the highest probability areas to trade.
Well, it's great that you say that, because I remember when the market had put in its low and there were a few trades that I had on the TQQQ. It was on a Monday, and then the Wednesday we caught news twice, right? And I felt very, very lucky. The first one was there's going to be, the pause on tariffs, and then it turned out to be maybe fake news. And then it was, no, there actually is a 90-day pause on tariffs. And then that was like the 12% up day. But then fast forwarding like, a week or, maybe even 10 days later, you had like 4 down days in a row. And the fourth one was the very, very negative breath day. And it also happened to be the day that Netflix posted earnings. And Netflix, had a nice earnings reaction, but then kind of got dragged in by the market. And then the very next day, the market's giving us some follow through. And sure enough, I'm buying Netflix, zero headache. The next day I buy Palantir. Yeah, Netflix was beautiful. It was that very next day, literally over $1,000, where you can just draw a flat horizontal line. It was getting up above prior day high. It was, it was 1,019 was my entry with 1,004 as my stop. And you're talking about a $14, $15 stop on a $1,000 name. Peanuts is what you're risking effectively. Very simple setup, zero headache since my entry, and what has been effectively zero headache. Well, the next day I bought Palantir. The day after that, I bought CrowdStrike. Same day I bought Uber. So it's like in 3 days, now I've got 4 names, great progress, and something that I can build behind. And then that's how I started to find other names. That's how I started to eyeball Hood. And that's how I started to eyeball CLS and, just start to try and build myself into, even trying to get myself into BABA, eyeballing Tesla, which I still own today, TMDX and TOS. So it's like you have to have like this starting point. And normally the starting point, and you'll agree with this, Clement, the best time to look for stocks that are showing relative strength is when the market's undergoing a correction and then breaks through maybe back through that key level, gives you a follow through day, etc. And then you get to develop like the proliferation of setups from there. But usually it's like the best stocks, they're acting well when there's fire, right? And then those are the ones that you go and get. And then when they move, because they had shown such nice relative strength, the moment the market takes its hands off that beach ball, right, those stocks are off to the races. Right. I mean, you're talking Palantir up 32% initially from where I bought it. Netflix up, 200 plus bucks from where I bought it. So that's just, and again, this has been a complete headache free trend. I mean, you couldn't ask for anything better. And it was funny because I actually even had this thing on the watch list as an $854 undercut and rally, because I thought to myself, like, there are a lot of stocks here that are hardly breaking March's lows, right? Those are the names you want to vote. Like, there are a lot of stocks that got crushed right through March's lows and are still acting heavy, a la Apple, right? And I don't even bother talking about Apple, right? It broke March's lows, and you can hardly reclaim March's lows. So,
and it's still below the 200-day.
And it's still below the two. It's why you never hear me talk about it, because there's nothing to talk about. Right?
Yeah.
And so, but then were a lot of stocks, whether you're talking about Hood, Palantir, Uber, CrowdStrike, Spotify, Netflix, where every single one of those gave you that undercut and rally. Like, I believe Hood's was at $35. I mean, how nice is that? You want to talk about a spot of spots. And when it rallied through there, zero headache. It was on a day where the market was going nuts. And then Hood did really nothing wrong but digest for a few days after that. Yeah. So, God, man, I had such a nice position on that thing twice, and I shook myself out twice. So annoying.
Well, we all make mistakes. Speaking of Netflix, I made a mistake here too. So on the day that you bought Netflix on earnings, I was actually being a smartass, and I shorted the double top here. And then for the first day, I felt like a genius, right? Like, oh, look, it's kind of working. And then the next day, it blasts past me, and I had to take an L on this. And that's when I kind of snapped out. I realized that, okay, I think we're really going to go higher. This is for real. And I was scrambling, searching for the leaders, and I got Netflix on that green line breakout. And so that's another thing, like kind of looking at all these intraday charts. You could kind of tell the character of all these charts as they go higher. So Netflix, for example, in this 30-minute chart, you see it goes up, it flags, it goes up, it flags. So this is clear accumulation. And it's like, it's kind of how I was able to get really aggressive and kind of get concentrated positions is in, positioning myself as they, intraday as they were going higher. And then it's only towards, the latter part of the month, last month was when things started to change. Things are not trending as cleanly. We're beginning to stall a bit, and that's kind of the signal to step off the gas. So just kind of looking at the price action, you could tell and kind of have a feel of the tape with what is going on.
Yeah, and every time the market goes down, this thing wouldn't really go down with the market, or if the market begins to digest, this thing is still green on the day, or you would get that morning washout. I'd look back at it 30, 40, maybe even 2 hours later, and it's marching right back towards highs. It's literally been one of the least stressful trades I think I've ever put on. And, part of the reason is you put it on after a correction, and it acts well, and then I didn't have to hold it through earnings. I bought it after earnings, which, is always a lesson. When you have to hold something through earnings, you might get shaken out like I did with Palantir. Like I remember I had, just sub $100 average. And then looking at the 20 simple moving average, I was like, this thing's at $102 at the time. I was like, I don't want to have to hold this thing all the way to 102. So when it gapped down, I cut it at 110, and then it goes all the way down to 105, and then that was the low. Very annoying, of course. That's how it happens. And then sometimes you get in the back of your mind, you get Christian Koulamagi whispering to you, 10 in the 20, 10 in the 20, 10 in the 20, and you're just like, oh. It is what it is. Get better, learn from it, and do better next time. That's all we can do, right? It's like, I'm not going to kick myself for that. I'm just going to learn from it and hopefully never make that mistake again. So, somebody here got shaken out the day after earnings on CoreWeave, and they sold out 47, or they had a 47 entry, should I say. And they got shaken out on CoreWeave. Yeah, it happens. It happens. And the damn thing looks like it wants to go higher too, which is just...
It looks like it's going to flag. So CoreWeave was something I caught. And along the way up, I was selling bits and pieces into strength. in my mind, I originally had the plan of, let me trail the 10-day and let's see what happens. But, like you said, it's easier said than done, actually. Psychologically, once you see a position up so much, you kind of you want to press that sell button and lock it in. But look, that's why I'm poor. It's flagging right now. It looks like it's going to set up again, and it has never violated the 10-day. So it's quite annoying looking back, but you learn.
Yeah, hindsight's 2020. If you don't make the mistakes in real time, how do you actually correct the mistakes? So, the beauty is that there comes a time when you've done well enough and you can and you understand the mistake that you made. I mean, I remember as a newer trader, there were times when I would make a mistake and I didn't know exactly what to review because my trading was full of so much randomness. I didn't know how to categorize the mistake that I made, right? Was it an oversized trade? Was my timing off with the market? Was my entry tactic poor? Did I not have a re-entry when I should have? Right? Was I trading a stock that wasn't in a leading group? Right? There's a lot of little nuances now that I pick up on mistakes that I make, so that I try to not make them again in the future. But when you're a newer trader, it all still feels just pretty random, right? It's like you just do something and you just took a loss, and it was like you're dealing with the frustration of a loss. You don't really know how to categorize it. Like, what the heck did I do? So, it's tough. It's tough even as a newer trader, right? Because you're still trying to you want to make money, but you don't know how to learn, right? And that's half the battle for people is, how do you find them? How do you get into them? Where do you buy them? How much? How do you trail? And even when you feel like you've got some of it down, right? Like I started to swing trade well in 2023. Beginning of 2023. So, well over about 2.5 years now that I've had really nice success being a swing trader. But I still find myself making dozens of mistakes, and I'm going to look back in 5 years and I'm going to be like, how did you trust that version of yourself to put $1 million on something? You know what I mean?
That's the irony. Having that blind belief that you could make it is why you made it. So it's just, a matter of just got to believe in yourself, keep working hard, keep putting in the work. And, I'm just a normal guy. Like, I never ever thought that I'd be successful trading. And I've had really, really dark days. Like, I've been in a huge drawdown being a boom and bust trader, and having to dig myself out of that hole. No one there to help me, but just, as Kulamagi says, study the charts, make your own model books, find out how stocks move. And then the moment you go through a few of these cycles, things will start to click. And then you're like, oh yeah, this seems simple. And then you put it into practice, and slowly, as long as you keep reviewing and just being there every single day, you will make it. So it's just having that belief in yourself.
Two quick things. For if you're talking to any newer trader, what would you say is the easiest setup for them to maybe learn? And maybe one of your favorites that you think is the easiest to kind of go back and study and review, if you're going to kind of look through the markets and say, okay, these are the type of setups that, every new trader should have in their playbook.
I think as a start, I would highly recommend everyone go and pick up Mark Minervini's books. I think that is kind of where my trading foundation came from, the volatility contraction pattern, because that setup is timeless. It's basically a depiction of demand and supply on the charts. And I think that's one of the easiest setups to kind of learn as a start. And, as you're kind of exploring the internet, looking at all these interviews, you realize that all these traders trade a variation of that setup. So Pat Walker, for example, he likes clean base breakouts. It's a traditional volatility contraction setup, volatility contraction pattern setup. Sorry. So yeah, Mark Minervini is kind of where I derive my foundation from. For newer traders, that's where I would recommend them to go take a look at.
Yeah. And I was thinking the next thing as they're flipping through charts and looking at dailies, earnings gap ups.
Yeah.
Right. Look at an earnings gap up and then look at the S&P 500 and then see where it occurred in relation to the market. and then see how it went on to act from there. Right. Oftentimes I go back to the ends of 23 in October, when the market was having this perfect three waves down, 10% correction. And Netflix gapped back up. It was below the 200, but it gapped back up above the 200 in the middle of October. And this would be October of 23. Right. So it was below the 200. October of 23. Keep going. Here we go. Bingo. So you get the gap up back above the 200, and then look at how that's in the middle of October. And the market didn't give us a follow through day until the ends of October, right? But what did Netflix do while the market continued lower, right? Netflix went sideways perfectly. And the moment the market gave you a follow through day, right, this effectively goes on to triple, from there so far. So, and then you can obviously look at the S&P 500, and you could look at that. And it wasn't just this one, Clement. It was also ANET, DEC, right? You look at DEC, and then you look at, even AMD or Uber, and how well those stocks acted going back. When you gap up on earnings, into that time period. And I don't know that was actually October of 23 right there, or like the ends of October.
And
like January 1st or November 1st was the follow through day, but it had the gap up, prior to.
Yeah.
So, and again, even look at an ANET, that was another one that at the time caught my attention for earnings, right? Into new all-time highs. So, and they were all around the market follow through day. But Netflix did it in the middle of October. So then it just had to finish going sideways while the market actually finished its last leg lower. And then effectively, if you're looking at a relative strength line, that relative strength line is really climbing while the market's, dropping. Netflix is holding sideways, which is showing an unbelievable amount of relative strength. And then at that point, it's just a matter of waiting for the market to give you a follow through day, and then just executing on all of the stocks that had shown relative strength. ANET, AMD, Uber, Netflix, DEC, all 5 different industry groups, all 5 stocks showing awesome relative strength during a market downturn, and then all 5 stocks effectively doubling from that level. So super, super nice to see. I even think like AMD at the time was like at $112. Is the last time AMD ever showed relative strength. It's the last time.
It's a dog now.
Yeah, it's a dog now. But again, coming right out of a downtrend line, really nice reaction on earnings, and then big follow through. Big follow through from there. Really nice to see. And it was funny because I didn't trade AMD. When I traded AMD, $185 coming out of the little flag, and then which was unbelievable, even higher. Yep, right up there. And then, believe it or not, I got trims off at 225.
Oh, right at the top.
At the peak, yes, indeed. So I literally top ticked my trims, not my sells, my trims. So I felt really good about that. Felt really good. And then finally, man, I know you got to get prepared for the market open, and I got to get myself ready for stream. Where's a place that people can find you? I know we're talking, for the most part, we're talking to a lot of people on X, but you want to just share your name on X so people can give you a follow?
Oh, yeah, sure. So I am Clement_Ang17. This is my X page. So feel free to give me a follow if you guys find my content useful. And yeah, I'm also in your Discord, Daryl. So
I appreciate that, man. Thank you for being there. I appreciate you for being there and all that you share. And congratulations on the awesome year in the United States Investing Championship, man. Keep it up. Keep the gains that you've made, and just keep doing what you do. And I appreciate it. Thank you for being here, man. And we'll have to do one of these again. I enjoyed you being here. So, and I'm hopefully that everybody else did too. So I'm assuming they did, because it's a nice little mix up of listening to me all day long.
We love to listen to you, Ariel.
I appreciate that, man. I love it. I'm, how do I say it? I don't think anything brings me more enjoyment in this world than talking markets, man. I just love it so much. It's such a passion of mine, and we're all in this together. It's like we all want to get better at trading, and no matter how well I've done, there's still so much to accomplish, and it's nice to bring people along for the ride in real time, and so I love it. Again, man, thank you so much for being here. I'll see you in the room, and have a great trading day.
Yeah, you too, Ariel.
Thanks, Clement. Appreciate you.
All right. Bye.
All right. Bye. All right. That was awesome. So that was the first time I ever had somebody on, and that was fantastic. Clement is awesome. Like I said, for anybody who is not familiar with Clement, like I said, I have a big admiration for anybody who competes in the United States Investing Championship, and they're a top performer. Big admiration, to stick kind of your neck out there, to compete. I mean, that's as good as it gets. Hims, man, so annoying. Thanks again, Clement. Should have told me to hold on to Hims. Oh, I even had my alert set again. Jeff, yeah, glad you appreciate it. Thank you, man, for being there. One last question. Any idea on CRDO? Yeah, really nice earnings gap up. And you're back at $73. Don't think I would chase this one. We are 10 times its average true range from the 50. So be a little bit cautious on chasing CRDO. Not saying it can't go on to work, and not saying it won't ever go back to all-time highs, but you've gotten quite extended in a really short time. You're effectively going to be up 140% off the lows in 35 trading days. I mean, that's it's a bit insane, if I got to say so myself. So, like I said, I'm feeling a little bit frustrated that, Hims I got stopped out of yesterday, and Dash I got stopped out of yesterday. And of course, Hims is absolutely ripping today. Sucks, but it is what it is. Yeah, Clement was awesome. Hopefully we'll do more of these so you guys don't just have to listen to my ass all the time, and we'll get some more people in here. That actually ran my full length. I got to get myself ready to stream as well for the room. Thank you guys for being here. I appreciate you guys for the questions and just for being here today to listen to Clement and myself. So if you guys have any questions, please save them for tomorrow, and I will be back on in 23 hours. Thank you guys, and have a great trading day. Trade them well.